you for joining our webinar today. We're excited to talk to you and tell you more about tax preparation and finance brought to you by QuickBooks. My name is Zach, and as people join, please take a look at the poll that will pop up on Zoom, and you can answer a few questions about yourself so we can get to know you better and make sure that we tailor the content to you and your business. For those that have just joined, thank you for being here. We're excited to speak with you and share some tips and advice around tax prep and finances. Please complete the poll that should have popped up for you and tell us a little bit more about you and your business. And we'll get started here in just a minute. Okay, thanks everyone for joining. We're going to get started here. We'll share the agenda with you. We have two great experts joining us today, and Brittany and Lisa. Brittany will start by sharing proven strategies for organizing your finances, as well as sharing solutions to common challenges for Amazon sellers. And following Brittany, we'll bring in Lisa, who will share some tips and advice on simplified tax strategy and planning. And we will wrap up the webinar with Q&A, and we will take your questions to help you as you think about your finances and your taxes this season. Brittany, I'll pass it to you.
Yeah, thanks, Zach. I'm happy to be here. Thanks for the invite. I'm really excited to talk about this topic. As a CPA and accountant, it's definitely something I feel a lot of passion for. Here's just a little bit about me. I'm not necessarily going to read through this. Just a couple of highlights is that I own a company called Ledger Gurus that focuses on the accounting for e-commerce businesses, and that I am a pretty avid Dr. Pepper addict, and my favorite thing to do is just drive around in my car, drink my Dr. Pepper, consider my life choices, wonder where I went wrong. So if ever you can't find me, that's where I'll be. So as we start talking about how to organize your finances as a business owner, the first question I would answer is why? Why should you organize your finances as a business owner? And the biggest thing as a business owner, I understand this, is that if you're anything like me, you started a business in part because you wanted to actually make money. And if you never track your finances and you never really get a handle on it, then you really don't know where you're up against that goalpost. Like, how do you know if you're succeeding or failing at that goal if you're not ever tracking your finances? And you don't have to be a mathematician to be or a CPA to do this successfully. That's a common misnomer, is that you have to really have your head wrapped around math to be able to succeed at this. It's really not about that at all. In this day and age, the tools are easily in place to make this as easy and as streamlined as possible. And that's one of the things we're going to talk about today. So our entire firm is built on the foundation of QuickBooks. Every single one of our clients, we track their books on QuickBooks Online. And the reason for that is because it really sits in the middle of a hub. It becomes like an ecosystem into which everything else connects. And it therefore makes the tracking of the financial information a lot easier. It also incidentally opens the door to a lot of other automations and tools that are available, some of which we're going to talk about today. Part of the reason we're doing this webinar to begin with is because of this deep integration that QuickBooks and Amazon are now building with each other. And that integration only becomes possible because those are both cloud-based platforms that helps to streamline the process of how this works. So because QuickBooks is an online tool and because it is really built on principles of automation, one of the things I like the most about it is that it automates the bookkeeping with AI-powered bank integrations. So as as the person who's doing your accounting, I'm going to assume that some of you are jumping into this for the first time. I'm going to start my presentation by really focusing on you guys that are really getting into it for the first time. QuickBooks makes this very simple and very straightforward by building around these bank integrations that actually will suggest most of the coding for you. You don't even have to necessarily even like give that a lot of thought, because the AI is so advanced now. It makes a lot of those decisions for you. And as a result, after you do some pretty basic functions like just code your bank transactions and bring in the transactions from that integration with QB Commerce and Amazon, the financials, after a relatively small, simple list of tasks, which we're going to go into in this webinar, the financials that you need to both interpret to run your business successfully, but also then to give your tax accountant at the end of the month, at the end of the year, it automatically generates those financials for you, which is one of the things I like the most about this platform. So if you're still in Excel and you're still, in Google Sheets trying to figure out how to make heads or tails of your financials, I promise you that what you're doing is actually significantly more difficult than moving over into this world and taking advantage of the automation. So when we talk about like organizing your financials and getting on top of that, when you start with QuickBooks as the hub, one of the great things about that, when you live within this world of the automation with this sync now between QuickBooks and Amazon, is it takes the hardest part of it and it's going to simplify it for you. So some of you guys have maybe just begun selling on Amazon. Some of you have been doing this for years. So you really understand what I'm about to say to you, which is that Amazon settles every 2 weeks. And that when you see that deposit come into your bank account from Amazon, it's not just your sales. It represents a lot of other activity. And breaking out what's really happening there is one of the most challenging parts of doing your accounting for Amazon. There's a lot of different things. You're probably using Amazon for fulfillment and for shipping. You might be advertising on Amazon. You might be borrowing money from Amazon. All in all, there's just a lot of parts and pieces that represent all of that activity coming into your bank account in the form of one deposit. So how do you gain better visibility into what's really happening around that? Well, this integration between QuickBooks and Amazon is designed to do exactly that. So it separates your revenue and your fees, seamlessly mapping it into the right accounts. It automatically brings in your orders and payouts from Amazon and automatically breaks down those fees, the FBA fees, the storage fees, and everything else that's happening, which then gives you much better visibility insight into what's actually happening, which then allows you to go into the next things, which is to manage your cash flow better, have better accurate reports, and get insight from your revenue, expenses, and profitability. So this marriage between QuickBooks as the tool that sits in the middle of it and this integration between Amazon and QuickBooks will really do a lot of the accounting for you, which will then make it a lot easier for you to organize all of this. Heather's going to show us a quick video on how all of this works so that you guys can see how it works in real time and in real action.
Amazon retailers have a new way to save time using QuickBooks. Now you can seamlessly connect Amazon to QuickBooks Online so that nothing falls through the cracks. The connector lets you automatically see your orders and payouts from Amazon in QuickBooks and gives you a better view of your income and expenses, all in one place. Setup is fast and easy. Just connect your Amazon account and start sending your data right to QuickBooks. From there, QuickBooks separates your revenue from taxes and fees and seamlessly maps it to the right accounts. QuickBooks gives you trends at a glance, including your revenue, orders, and top-selling products by channel. Stay on top of cash flow, run accurate reports, and get insights into your revenue, expenses, and profitability. See all your transactions nicely organized across your balance sheet, profit and loss statement, and all your reports, and ensure your books are up to date. Simplify reconciliation by matching transactions to bank deposits in just a few steps. Keep your e-commerce business connected with QuickBooks.
Great, thank you very much for that. That was very, very helpful. So as you guys can see, it after you set it all up, you're going to map your transactions into your QuickBooks chart of accounts, and the rest of it happens pretty automatically. And you can see the breakdown of the fees. You can see the breakdown of what your products are doing. It definitely makes simple something that would otherwise be very complex. Were it not for tools like this, basically, the alternative would be that you guys would either have to lose a lot of data by just calling what deposited into your bank account just sells, or you would have to become experts of the back end reports of Amazon reporting and learn how to manipulate all that data in spreadsheets, which I can tell you from experience, because that's how we used to do it before tools like QB Commerce existed. This is definitely a much better option for us these days. All right, so you have two different scenarios you can play with here. You can either like not get a hold of your finances, not organize them, wait till the end of the year, be in a frantic rush, throw a shoebox full of receipts at your tax accountant and hope for the best, and actually end up getting charged a lot more for that tax return than you otherwise would, because now you've significantly increased the scope and the frustration of what that tax accountant is going to have to deal with. Or you can learn how to do this process, set up these tools, integrate these systems so they work together. All you have to do at year end then is just close out the most recent month that ended at the end of the year, and then either send over those reports to your tax accountant, or even better, in the world of QuickBooks Online, just give your tax accountant access to your QuickBooks file. And then he can even, or she can even answer a lot of their own questions themselves. You wouldn't even have to like go into a lot of detail on that. It's pretty slick. So as someone who has been doing this for years, let me just tell you from experience, tools that integrate, tools that use AI and intelligence to automate this for you, that make it so that when you're done at the end of the year, it's all finished. You just roll it all out and you're off and running. It really does make for a much better experience. So if you haven't engaged in this yet, lean into the learning curve. So some of you may be relatively new at this. Some of you may be smaller sellers, and everything I just described feels really overwhelming. So one of the things I really like is when people just give me a checklist, like just tell me what exactly to do and I'll do it, right? So here is your checklist. Number one, you're going to initiate a QuickBooks account. Next thing you're going to do is sync all your bank accounts and credit cards into QuickBooks. If you're not sure how to do any of these steps that I'm telling you about, there are YouTube videos all over the place that will walk you through this. Literally just put in exactly what I'm saying right now and search it, and there will be videos that will pop up to show you how to do this. Decide on a chart of accounts. If you are completely lost on this as well, you can come to our website, ledgergurus.com. We have sample chart of accounts. We also have a whole bunch of other downloads you can use to kind of get you up to speed on this. We have spreadsheets that will help you track inventory. So if you don't even know where to start with a chart of accounts, feel free to come download our resource. You can upload it right into QuickBooks. It'll create a chart of accounts for you. Then you're going to connect your QB Commerce account over to your Amazon seller data and bring over your settlements from Amazon. This will do all the backend accounting for those settlements for you. Then you're going to code all the other bank accounts. You're going to code all the other transactions that hit your bank account. This is where you're going to be recording things like this was rent, this was travel, this was food, this was utilities. That's where you're going to identify the buckets that all those other transactions should fall into. Then you're going to reconcile all of your accounts. Now, this is really important, very important that you reconcile all of your bank account and all of your credit card accounts every single month. This process is obviously beyond the scope of this particular webinar, but again, there are lots and lots of YouTube videos that are waiting, eager to help you figure out this process. Last, you're going to review your financials to determine if everything looks right. This is both to kind of like catch and track errors, but also more importantly, it helps you as a business owner begin to understand how to look at your financials, how to review your financials. We have a YouTube channel that if you just go on YouTube and look for Ledger Gurus, we have videos that will specifically show you how to review your financials if you're an e-commerce business. There's two financials in particular that I want you to review every single month. The first one is your profit and loss, and the second one is your balance sheet. As you go through the balance sheet, you want to make sure every account makes sense to you. If this is your bank account, does that bank account balance make sense to you? Go all the way through it, and then you're going to pull up your profit and loss, and you're going to review it both to make sure that it looks accurate, that it feels right, and also just to see how you did for the month. If anything looks off, you're just going to double click on the balance, and it's going to pull it up, and it's going to show you all the transactions that make up that balance. In this way, you're going to be able to troubleshoot your own work. You're going to be able to validate the data that's in there. This may feel overwhelming, but literally this checklist of what you need to do is really all you need to do to get started on this. It's pretty straightforward and simple. So now let's talk about some practical solutions to common problems that you're likely to face as an Amazon seller. Number one, and the biggest thing, is tracking and managing cash flow. So one of the other reasons why we're really excited about this partnership between Intuit and Amazon is because it will allow for you to have simplified access to capital. So eligible sellers using QuickBooks will have the ability to get personalized loans through QuickBooks Capital, streamlining this funding process to accelerate your business growth. And as you guys know, like, cash flow is a real problem for e-commerce sellers. And why? Why is cash flow a real problem for e-commerce sellers? Well, let me tell you why. It is because you have very long cash cycles, and very long cash cycles create cash flow problems. So what do I mean by a very long cash cycle? Well, most of you are probably ordering your product for overseas. After ordering it, you then have to wait for it to come to your warehouse, and then you have to probably take it, send it on to FBA if that's where you're selling it, or put it away in your own warehouse. Then you have to list on your channel, and you have to convert that inventory into sales and collect payment on that before you're going to see the cash that you had to invest on the front end to get your vendor to either send you the inventory or to begin manufacturing on your inventory. When you're ordering from overseas, it actually expands your cash cycle by many months typically. And so as opposed to you being able to just go buy something, stick it in your warehouse and sell it fairly quickly, that process of ordering, waiting for it to be produced, waiting for it to come across the ocean, waiting for it to get into your warehouse, waiting for it to convert into sales. So this creates a very, very long cash cycle. And when you are a small Amazon seller who's trying to figure out how to make ends meet, like, this becomes a real problem. So as I mentioned, this relationship between Intuit and Amazon facilitates you getting the cash that you need. Why does it simplify this? Well, let's talk about a couple of things. First of all, they already have visibility into your books. So because Intuit is on the lending side of this, they have immediate visibility into your books to see like what's really happening there. Therefore, they're more confident lending you money. And that whole part where you have to like go to the bank, build a relationship with your banker, like produce the financials, have them review it. Much of that is actually happening automatically on the back end by QuickBooks, which makes this process a lot easier. Also, you already have an established relationship with QuickBooks. They've been in your business. They have been your books for the past little while. So that relationship already exists. And so you can really help to speed up this cash cycle, which is very helpful. Number two problem for Amazon sellers is inventory. Inventory, and everything about inventory, everything from trying to decide how much to order, to trying to keep track of it, to trying to understand the value of it, to what the heck is this cost of goods sold accounting, to why is my tax accountant telling me I have to make an inventory adjustment that's changing my taxable income. All of this is such a big pain, but I want to invite you guys to start small. There's a couple things that you need to focus on. Also, we have lots of videos on our YouTube channel that talk about inventory, including everything from starting small to building upon that. But let me just invite you to track a couple of things. There are two things really with inventory that you need to have your head wrapped around. Number one is quantity, and the other is value. So I want you guys to start by just having a spreadsheet where you begin to build what I call a product cost catalog. And that's where you have all of your SKUs listed out. And then off to the side, you have the value that you're associating with that SKU. Whether you're deciding to go with a buy cost, and that would be just what you bought it from your vendor for, or whether you're adding upon that landed cost, which would include all the costs to take it across the ocean, the tariffs, to bring it into the United States, all that other kind of stuff. Whatever method you're using to track value, start somewhere. And then the other thing is you need to have an understanding of the quantity, and quantity is a movement all the way through. Try to keep track of what's ordered, try to keep track of what you have, try to keep track of what's been sold, and then try to keep track of what's been returned. Kind of the catch-all for this, if you are really struggling with this, is to true it up against an end count periodically, like wash away all of the sins of your past and start fresh and start new. But inventory is a really tricky thing. And I invite you to start engaging in this battle with inventory when it's still small enough that wrapping your head around it is at least fairly doable. We have clients that are doing many millions of dollars a year in revenue. And they never really started on this journey when it was simple. And now they don't even know where to start, right? Like, it's so overwhelming. One thing you need to know about inventory is, like, you're never going to be shooting for perfection. It's like the proverbial sock in the dryer. Like, I put two in, I don't know why one came out. just know that you're not shooting for perfection, but what you're trying to do is you're trying to wrap your head around it. So as the complexities of your business grow, you are growing in your maturity simultaneously. And the last problem is learning how to sell and profit marketably. I mean, how to sell and market profitably. And this is the bane of just business owners in general. This is not something that can be taught quickly in a webinar. In fact, it can barely even be touched on in a webinar, but I can invite you to start your learning curve on this now. So most business owners do not start businesses because they like the financial side of things, but it is absolutely imperative that you learn to understand the financials if you are really going to grow and succeed and thrive as a business owner. So what can you do? What can you do to start now? Attend everything you can that will help you learn more about this. Read books, find good partners, lean in, outsource your accounting if you need to, but learn how to speak the language, learn how to interpret what you're seeing. Also, do not lean too heavily on agencies, especially for marketing, because in order for you to really learn how to build your business profitably, there are two things you're really going to have to own, at least from my experience, and that is your product development and your marketing. Agencies will never care to the same degree that you will care. And if you can build internal capabilities, the sooner you can build internal capabilities, the more successful you will be. You will only become truly great by owning this yourself. And everything besides these two things can and possibly even should be outsourced. But lean into the process and the learning curve of learning how to think about business, learning how to think about how to be profitable. There's a ton of business books you can read about this, but lean into the journey of learning how to master this. It will pay off in dividends. It will pay off in spades. It will pay off in profits if you can learn how to master this. So now I'm going to pass the time over to Lisa. She's going to cover simplified tax tracking and planning, and we'll see you guys next time.
Brittany, thank you so much for sharing the proven strategies for organizing your finances. Now I'm going to be discussing simplified tax tracking and planning and how to maximize your return. So a little background about me. I have been doing taxes for over 20 years, and I have held many different positions. I've been a controller, an auditor, as well as an operations manager. And I just love breaking down taxes and making it simple for people and just helping them figure out how to save money on their taxes. I also am a spokesperson for TurboTax, and so I have enjoyed being on many shows. I've been on the Steve Harvey Show, as well as Ellen, and I also do a lot of broadcast interviews and talk to reporters and break down tax laws. And for me, getting information out about tax laws is paramount, and just helping people save money on their taxes. So first, I want to go over key things you need to know for tax year 2024. First, let's start with Form 1099-K. Now, there were a lot of changes and talks about changes being made to thresholds as which 1099-K forms would be issued. First of all, if you're new to selling, a 1099-K form is a form that you'll get if you have payments processed through a third-party provider like Venmo or PayPal. And so under the American Rescue Plan, the thresholds were going to be changed to over $600, and they were 200 transactions and $20,000. But there's going to be a transition period. So for tax year 2024, you will receive this form at over $5,000. But when you get this form, don't panic when you see that income amount. Remember that any expenses directly related to your business, you can deduct those. So we're going to go over some of those expenses, but you want to make sure you track those expenses so you can lower your taxable income. Next, if you're new to this, I'm going to make this discussion relevant if you're self-employed or if you're a small business. If you're self-employed, if your net income is $400 or more, then you should file your taxes. And, that is because you will also need to pay self-employment taxes. And self-employment taxes are 15.3% of your net income. And then you're also subject to estimated taxes. So if you're expected to owe $1,000 or more, you need to make estimated tax payments, and that is quarterly. But I do have a trick. A lot of people don't know this, but you can annualize your income so you are not penalized in those quarters that you don't pay estimated taxes. A lot of people don't know this, but the IRS does realize that people in business, they don't get their income evenly throughout the quarters. So you can recognize income in the quarters that you receive the income, and those quarters that you don't receive income, you would not get a penalty by annualizing. And then lastly, state sales tax. So you are required to collect and submit your state sales tax that you collect from your customers, but the good thing is Amazon will collect and remit those sales taxes in most cases. So the best advice to get started on your taxes, first you want to get started as soon as possible. One thing I want to highlight are the tax deadlines. So if you're self-employed, your tax deadline is going to be April 15th. But if you are a small business like a S Corp or a multi-member LLC, your tax deadline is coming up sooner, and that's going to be in March 17th. So first thing you want to do is gather all your forms and documents in one place. And then second, you want to make sure you separate your business and personal expenses. You want to have a separate credit card for your business and your personal. But if you don't, there's no need to worry. I know when you use QuickBooks, there is the ability to automatically swipe and separate your business and personal expenses. And then also, you guys have the ability to import directly from Amazon. So that is a great option that you're able to, automatically import the income that you make. And then you also want to review your 1099Ks that you're going to receive. We talked about earlier, if you had payments processed at over $5,000, you're going to receive this form. You want to compare your Amazon reports and make sure that what Amazon is reporting matches what's reported on your 1099K. And then you also have the option of transferring your business income and expenses directly from QuickBooks or QuickBooks Self-Employed if you are self-employed. And so you're able to, automatically import your income as well as your expenses. And then you can also snap a photo of your 1099K, and that information automatically imports to the correct form and the correct places on your TurboTax tax return. And then if you don't want to do it yourself, you can hand your taxes over to our TurboTax Live business tax experts. So most important, we want to talk about some key deductions that can help you save money for your business. And we talked about you definitely want to feel empowered to deduct anything that is directly related to your business. So expenses like travel, airfare, or lodging, if with Amazon, if you went to a particular conference for Amazon or something like that, you would be able to deduct that. Your car expenses related to anything directly related to your business. So your mileage for tax year 2024, that's 67 cents per mile. Or you can choose to do your actual expenses. It's either or, you can't do both. And then also a lot of people are surprised to find out there is something called the Section 179 auto deduction. And with that, you can deduct a big expense if you put in place an SUV that is 6,000 pounds, but under 14,000 pounds. And you have to put that SUV in place for your business in tax year 2024 and use it over 50% for your business. And by doing that, you may be able to deduct up to $30,500. So that's, that's a big expense that can lower your income. And then also any equipment that you buy directly related, your computer, also, your home office. If you're using your home office and you have a dedicated space for your business, you're able to deduct expenses, a portion of your expenses for your home. So like your mortgage, your rent, your utilities, you're able to deduct a portion related to the square footage of your home office. And then any insurance you're paying for your business, since you are self-employed, bank fees as well, on your credit cards. And then also there's a possibility to deduct your retirement contribution. So if you're self-employed, you can contribute to a SEP IRA, and you can contribute up to 25% of your net income, or $69,000, whichever is less. And you can actually do that up until the extended tax deadline, and you're able to possibly deduct that contribution on your 2024 taxes. And then we want to share some resources with you. There are a multitude of resources. If you have questions, we have the TurboTax blog where we have content. We have interactives. One of them is like a self-employed deduction interactive where you can put in your profession and you can see expenses that are directly related to your business, and it lets you know what you can deduct. And then also, you can hand your taxes over to our TurboTax Live full service business tax experts, and they specialize in business taxes. So you are in good hands, and they will help you maximize your tax return. And then, we want to answer any questions that you might have. Maybe there are some things that have come up that I did not cover. So we are going to be taking Q&A right now.
Hi, everyone. Thank you for joining the webinar. Thank you to Lisa and Brittany for sharing their expertise and for talking through the areas to help you with your finances as well as your taxes. We're going to go into the Q&A now, and I'll start with the first question that was submitted. So the question is, once I have QuickBooks, would I need to get something separate called QuickBooks Commerce, and does QuickBooks Commerce have a fee? So when you are a QuickBooks Online customer, that includes the Commerce integration as part of your QuickBooks Online subscription. So there is no additional fee for that. And you are able to connect your Amazon seller data to QuickBooks within the product with a seamless experience. And once you authorize that Amazon data to come to QuickBooks, then you'll see your transactions and sales records start to come through, which will then allow you to match those up with your payments that you receive in your bank account from Amazon. The next question is also related to this. So there's a question of, can this be done using the free Amazon Seller Connector by QuickBooks, which I believe was when Lisa was sharing some of the tax advice. So the Amazon Seller Connection through Commerce will bring in your Amazon seller data so that you can organize and balance your accounts for your bookkeeping. When you go into tax time, you will be more prepared then to go and file your taxes because you'll have sorted out your Amazon income or sales income through Amazon from the expenses such as like shipping or fulfillment costs. And so you'll be more prepared for tax time, but then you will still have to go through the steps that Lisa talked through in terms of gathering and completing the tax forms. Lisa, is there anything else you wanted to add related to that?
I think you covered it, and I'm sorry, I'm trying to join and
No
get
problem.
off of take my video off of mute, but I'm having a little difficulty. But I think you covered it, but I am here to answer any other questions that come about.
Okay, great. The next question that's come through is, since Amazon automatically remits state sales taxes, do I still need to file a report with the comptroller? Is it just a zero report? And so, Lisa, do you know, or do you have a perspective on how to handle state sales tax when Amazon already remits it automatically?
Yeah, I would go back to the state controller and, make sure that you have proof that it was remitted already. Make sure that those documents match up to what should be remitted, but I would go back to them and show proof that it's already been submitted.
Thank you. The next question is, do you import inventory and how are my sales recorded? Keith, can you speak to how the data comes through and what it will show up as for our customers when they're using QuickBooks?
Sure. Yeah, thanks, Zach. So inventory is available to import from the Amazon channel. So when you connect to Amazon, if you have inventory enabled in your QuickBooks account, which is something that will be available on the Plus or Advanced subscription, you will be able to select that you'd like to import inventory, and it will then create all your products that you have on Amazon, all your active listings, and create those or match those to your items in QuickBooks. All the inventory will then be managed inside of QuickBooks. From there, as the orders are processed, it'll deduct the inventory, and then inside of QuickBooks itself is where you would manage your inventory levels, the costing, all the COGS data would be stored in there.
Thank you, Keith. The next question is related to that. So Keith, you might take this one too. Is Amazon fulfilled by Amazon inventory automatically synced with QuickBooks Online? So the question is, if they're using Amazon FBA, does the inventory sync?
Yeah, so this one, there is only a single inventory level inside of QuickBooks. So whatever the inventory level is when you first import those products is the inventory level that will be shown in your QuickBooks items. But there is no separate tracking of the FBA inventory. So inside QuickBooks today, it's just a single unit of how many units you have on hand, and whatever you've had in your Amazon account, if that was your FBA inventory, that'll be what your starting value is. But there is no two-way data sync back to FBA to keep that up to date.
Great. Thank you, Keith. The next question is related to inventory and cost of goods sold. So Brittany, hopefully you can help with this one. It's, how do I handle inventory adjustments for lost or damaged goods?
Yeah, so, and this can be particularly challenging when you are using a 3PL like FBA because you don't necessarily have the same level of visibility into what's happening in their warehouse. So like, let me start by answering that question, assuming that you do have control over your own inventory, and then you can kind of extrapolate that into the Amazon world. So when inventory is lost or stolen or destroyed or anything that might cause inventory to disappear besides just shipping it to a customer, it's usually handled with an inventory adjustment where you're going to write down that inventory to indicate that the cost of goods sold A lot of times people are expensing that through a different account because cost of goods sold would indicate the inventory was sold, but you might have like a spoilage or retainage or loss of inventory account that's a profit and loss account that just captures the value of that inventory, and you're going to remove that from your balance sheet total value to whatever expense category you're like associating with that. When you're doing this on Amazon, it is a little bit more challenging because the visibility into that can be a little bit trickier to see. But they do still have reports that you can pull to kind of see like inventory lost, inventory found, inventory destroyed, inventory returned. So obviously there's a lot of movement of inventory that's more than just sold and received into the warehouse. So whatever report you have available inside QuickBooks, you're going to write down the inventory value based on the quantity that it was reduced by. And the inventory functionality inside QuickBooks facilitates that really well. The tricky part is not how to write it down when it happens. The tricky part is how to have real visibility into when that loss occurs to begin with, when it's not your own warehouse.
Great. Thank you, Brittany.
Mm-hmm.
The next question is a tax question, so I'll turn this over to you, Lisa. The question is, should I register my Amazon business as an LLC, S Corp, or sole proprietor?
Yes, so that all depends. If you're, just getting started as a business, and you're self-employed, one thing I see sometimes is that people that start businesses, and they're not making a lot of money yet, they think the thing to do is just jump in to a corporation or an S Corp. And you just have to evaluate, there may be some costs when you do that, some additional costs, additional documentation and paperwork, since being self-employed or just being self-employed, you're going to have like one tax return because your self-employed business is going to be reported with your personal. You're also going to be able to take many of the same deductions that you get if you are an S Corp or a multi-member LLC. So that's just one thing to keep in mind, because I have seen people that are not making money yet and they just jump into it, and then they're subject to like some state taxes can be as much as $800 and they're not making any money yet. But once you're making money, it can be a benefit. So if you're an LLC, that's a limited liability corporation, so you're not legally personally liable. People can't come after your personal assets when you do that. So that's one of the benefits of that. S Corp has a benefit. You will be, you're taxed on your profits and losses, and that's divided with whoever is in your partnership. And then that flows through to your personal taxes, like your net profit. And so that would be how you're taxed. So you just need to, evaluate it, but also remember, if you're self-employed, you're still able to get the same deductions and credits that you're able to get as an LLC or S Corp.
Awesome. Thank you. I actually have one more question for you, which is, do I need to report my Amazon income if I did not receive a 1099-K?
Yes, you should still report it. And it does depend on, so first of all, if you're self-employed, the IRS requires you to file a tax return if your net income is $400. So, that's your income minus your business expenses. So that would be the case when you should still file. It would depend on your other income. And then, getting a 1099-K, if you're a small business like a S Corp, or not getting one, I'm sorry, you probably have other business income that you're reporting, so you would be required to file.
Great, thank you. This is our last question, and then after we close the webinar, you'll see a few questions from us. This is just in order for us to better get to know you and make sure that we can deliver better and improved webinar content in the future between the Amazon team and the QuickBooks team. So last question is for you, Brittany, and it's, what's the best way to separate Amazon sales from other revenue sources for my business?
Oh, that's a great question. And my favorite method for this is actually class tracking. So the reason why I like class tracking instead of utilizing things like multiple income accounts or multiple expense accounts is the ability to actually really see what's going on with the channel without having to pull out the calculator. So the way I want to describe this basically is if you are selling on Amazon and Shopify and eBay, if you were going to break that out with just using a chart of accounts, you'd have Shopify sells, eBay sells, Amazon sells, and then you might see eBay fees, Amazon fees, Walmart fees, or whatever. And then you'd have to pull out your calculator and basically say, here's my sales, minus here's my fees, minus here's my cost of goods sold. When you use class tracking, you actually break it out in columns so that everything that pertains to that particular channel is all isolated within that column. And therefore, the calculations that a profit and loss statement naturally achieve happens automatically. So you can see your gross profit margin, you can see your net income all the way to the bottom, and you can see that for every single channel. You do have to be on QuickBooks Plus or higher in order to facilitate making that happen. But if you're selling on multiple channels and that visibility is important to you, that slight increase over the subscription cost is more than worth it in order to be able to see each of those channels broken out in that way. Class tracking is by far my preferred approach to isolating channel activity.
Awesome. Thank you so much, Brittany. Thanks again to both Brittany and Lisa for sharing their expertise, and thank you to everyone here for attending our webinar, and we look forward to bringing more to you in the future. As you exit, please complete a few questions, which will just take 1 to 2 minutes. We'll see you later.
Thank you, everyone.
Thanks, guys.